Okay. All right. Cool. That was weird. Okay. Hello. Welcome. Big stuff. I haven't been on for a bit. Sorry for anyone that's been waiting for more lives, more office hours, more programming, more mathematics, especially. I haven't done math in a bit, but I do have some subjects that I'm seeing now coming up from some of my students. So I wanted to make some either live streams or videos. I'm probably going to do live streams most of the time and get any questions live. I always like to interact with anyone that basically wants to join in, ask math questions or programming questions or market economics, fundamentals, technical analysis, but that's the last of all of them. So I just came on for a bit because there's some interesting stuff happening. I haven't been on in a while because I've been busy analyzing a lot, not only catering to new students that popped in now through the new school year. The market's going crazy, news is going crazy, absolutely a lot of things on my head, and my ADHD, as I'll explain in one of my little articles. My ADHD is a little bit extreme. So once I do something for a long time, I just want to set back a bit, go into nature, touch some grass, do that. So you will see me pop in for a couple of weeks in a row and probably disappear. But also the YouTube algorithm has been acting kind of weird lately. So it's been a little discouraging to actually be on regularly as I used to. Ever since August 10th, something happened, and a lot of creators are having some sort of, well, issue. I mean, I think it's something to do with the fight against ad block. YouTube's really hurting from ad block. A lot of people are starting to get pissed off at all the ads being put on YouTube. Like you watch one 5, 10 minute video, you get like 20 ads nowadays, and I see it too. Um, so a lot of weird algorithm changes happening. So that's why I've been a little bit absent, kind of taking a step back, mm, and also watching a lot of detail. So again, I do multiple things. I'm not a main YouTube creator, streamer dude. I do enjoy going online so I can communicate with my community, answer questions that people ask, just talk about random stuff that's happening. I do like the interactions. I'm a Leo, so it's kind of good to have a little bit of conversation on a lot of different topics, especially when a lot of people like to, well, talk about the weather. The weather is not very fun. It's one of those small talks I really cannot handle. Uh, it's just not fun. It's not fun. Or sports. I'm sorry. I rather play sports than talk about them. I rather play sports than watch them on TV. I do like hanging out with friends, watching sports and drinking beers. Like I'll go with that. But in a general sense, um, I'm not a very big small talk kind of guy. So, why am I here? Well, a couple of bits though that I wanted to go over. The first is what the title says, right? Fed rates are happening today. Um, Everyone and their economic grandmother are excited about it because a lot of people have an assumption that if the Fed rates get cut, the market go boom, which in a healthy economy, as I mentioned in my article that I wrote and published today, that's true. That's true. But in the healthy economy, currently we have jobs, numbers, becoming a bit obfuscated by revisions. Let me just go through the list, really. Mm, This was from a couple of days ago. I noticed some odd economic patterns from 2020. Um, we're having a lot of unstable job market quakes in the system, and then a specific company that has been leveraging their liabilities or their assets onto multiple liabilities. Basically, if you have, let's say, one car, you promise to, rent it out to three of your friends, but you have one car. How can you give it to three of your friends? Only one of them is going to be able to rent it out. but you're getting paid for three of your friends because it's rent, right? So there's a weird thing in markets where people abuse their finances to basically say, hey, I have a bunch of warehouse assets, and you JP Morgan, you can have a stake in it. Give me some collateral. I'll give you this as collateral, and you give me some money so I can invest. And then after that deal is done, that person goes to like BlackRock and says, "Hey, look, I have stuff uh, you can use as collateral if you give me money." So now double dipping into two different financial institutions with the same exact asset. And this is what happened with Archegos in 2020. This is what happened with the chaos that happened in 2020. So this is what I've noticed with the Texas Auto Group that filed for Chapter 7 bankruptcy recently. They have a couple, if not many, different well, collateral investors. And this might be the domino that pushes the camels back down into the ground. And that we re-enter our attempt to kick the can down the road. So the big red flags I'm seeing in the market right now that are just screaming chaos. Private equity firms um, are basically selling, or financial institutions are selling private equity into 401k investment plans, which is bad. The overall perspective of this first case is that there's just a lot of people already invested. There's not extra money anywhere. A lot of people are in stocks, a lot of people are in bonds, a lot of people are in commodities. There's just not more to squeeze out of those. So the next squeeze or the next area you can kind of raise funds for more, well, more money you can use to basically prop up the market is in private equity that no one really technically has access to. It is private for a reason, right? But now they're unprivating it and giving it onto 401ks. Well, the problem here is, oh yeah, okay, good. My 401ks now has a piece of the pie that's not normally accessible by the public market. Cool. The problem is the timing. Um, every time this sort of adjustment or exposure of an asset onto the public happens, it's because people are dumping, selling their investments. So basically at a top, there's going to be a what seems to be a top in the market. So they're trying to basically get rid of their assets. So they're like, well, where can we get rid of this private equity if we can't just sell it to retail investors? Oh, we can sell it into their 401k plans. That's a bad one. It's a very big bad one that's happening lately. A lot of news about buy now, pay later being basically just dependent. People are dependent. They don't have the money to buy their own food. They're putting it on basically credit, if not worse than credit-based payments. Very bad. And finally, those two cases could essentially coast without an issue, just kind of coast down the line unnoticed. But when you start seeing something that happens that might erase billions of dollars from books, financial books, you start to get suspicious that everyone's already hanging on by a string, and it's a very calculated string. Like they know how much weight it can hold, and we're like trying to get to that. If the string can hold 5 pounds, we're at 4.999999 pounds. Just so close to the breaking point. We've calculated friction, we've calculated gravity, we've calculated every little thing to just barely have that string. One little wind, and that string will basically snap. And the things that will happen is something that's uncalculated will pop up out of nowhere, erase a couple of billions of dollars, and then affect the other two calculated extremes. So I'm seeing that potentially the Tricolor bankruptcy is going to affect everything else on the market that's been basically min-maxed to its most possible, closest breaking point possible. And consider AI and every single other measurement we have nowadays, we're essentially working with that. An absolutely optimized min-maxing of every single possible line of debt and loans that we can possibly have on the market. and now a bunch of money, like Archegos, gets erased, it's going to affect somebody. So there's a couple articles you can read. I'll leave these in the description below. But this is kind of where it all starts. The odd economic patterns are starting to emerge. This is what happened in 2020. Not to mention these, like when we go further into the Tricolor bankruptcy issue, that's in one of the other articles. We start to see that these are asset-backed securities, which should kind of perk your ears a little bit to mortgage-backed securities. Something that happened in 2008, where people were given mortgages that they were not able to pay back. And before anyone could even calculate the actual probability of, completing, fulfilling those mortgages, they get sold out onto the market with false, basically false sense of um, rating. Oh, they're really good rating. They're low risk. Go ahead and buy them up off the market. That's what they rated it as. So there's a lot that you can basically learn through these few articles I've put the last week, week and a half. One of them is how to basically take a look at the general market, like SPY, the S&P 500, and weigh it against gold. So you can actually get this. This is what our actual market looks like when we say, hey, don't tell me what it is in the worth of dollars because dollars are inflated. Tell me what it's worth under the process of valuating gold, because gold doesn't get diluted. It's like Bitcoin, right? You cannot create extra Bitcoin into the world. Therefore, you cannot create more gold in the same aspect of the physical world. You can maybe mine it, but that takes a long time, a lot of money, and you have to find it first. So there's like this limited quantity of gold. So you can never print more gold. So this is the actual worth of our market. This is 2000. Keep this in mind. This hill, this bump up here, this is 2000. This is 2008 to 9. And we're here. This is the value of the current market in relation to the gold valuation. You would imagine it would look like what we've seen it on the news. Going up forever into the top right, rocket moon, to the moon, all these rocket emojis, whatever. That's not fundamental value. That's inflation taking part. So there's a lot of things you can learn from basically reading these articles, not only from what's happening currently, but how I take into account anchoring valuations so you can actually get an accurate sense, of what actually something is worth, not dollar money, because honestly, it's starting to feel like hyperinflation is around the corner, which essentially means don't hold any cash, no savings, just equities. Sad to say, but if the dollar keeps farting, keeps falling, the only thing, even though, the price today is way less in relation to gold than 2000 of the overall market because of inflation, well, if you kept cash, you'd be in a worse position. So keep that in mind. I do not believe cash is at all worthwhile anymore. The biggest case to remember is that there's a lot of money that's being actually used as collateral, US dollars used as collateral outside the US. And that money, once trust in politics and everything you've been listening to, all the chaos happening in the US politics, world events, BRICS taking over as a competitor to the US standard, that could cause people to rebalance their books and alleviate some of the US dollar collateral that they've been holding, if not even further, bonds, flooding the US market with dollars, importing them back into the country. And when what happens with supply and demand, if there's more supply, the value of that particular thing, well, it's worth less. So the US dollar is still to see a potential flood of imported dollars that have been used up to this point as collateral around the world. That's one of the ways you can prevent inflation. You print money, you distribute it, and then with time, that money leaves the US market and stops moving in someone's collateral box. And they can use those dollars later down the road if they ever need to redeem the value of them. So this is kind of also what's been obfuscating inflation up to this point. I mean, it's not been doing a great job because we've been uh, printing trillions of dollars in the last 20 years, but we haven't felt the extremes of that inflation just yet. So I would say holding any US dollar based monetary fiat is not going to be good in the next 10, 15, 20 years. Here's my main focus for today. Fed rose interest rates, or not rose, uh, cut. Ah, dang it. Hold on. The last time the Fed cut interest rates, we experienced the opposite effect. I need to publish this. Hold on. Fix that. Big detail. I was, not only do I have ADHD, I have a sense of dyslexia when I'm thinking of one thing, I write the other. So, the last time we cut in October, the general sense idea is that the overall market will follow. However, supply and demand in the bond treasuries went in the opposite direction. The yields actually went up. This is a huge sign that there's an issue. I go through a lot of detail in this article to really get into an idea of why this happens and what's the natural, healthy way of it happening. So I'm not going to go over it in the video, but just so you know it's here. I'm going to be linking that downstairs in the description. So margin calls, rate cut signals going inverse of the expected. We have another rate cut today of 25 basis points. See how that goes. And there's like a little how can we benefit from all this chaos at the bottom here. So this is what I've been doing. This is why I haven't been programming online or streaming and chatting, doing stuff online basically on the live format, right? I haven't been live in probably a couple of weeks. Not only that, I've been visiting grandparents, helping out with gardens, just kind of going back to nature while doing other computer stuff, whether it's staring at statistical data or programming. Oh, it's so much. There's just so much to stare at a screen for, and I'm trying to like really partition them into pieces. I don't want to go too crazy over always being on the computer because again, it drives me nuts too. Mm, that's the biggest piece here. I've got a couple of other um, details being put up. A historic short squeeze in the past century that's coming out tomorrow, publishing it on date then. The more details on the Tricolor holding bankruptcy. Now it's going to be on the 19th. It's going to publish. I'm going to postpone the publishing only because I don't want to overflood the details, the information being published, and I also want to double check over time. If I write everything at once and like this one, I had to change it from hike uh, to cut, right? Raising rates to cutting rates. I tend to leave a lot of mistakes. So I always go day by day, refresh after a full day after I've done the written article, refresh, reread it, go through editing, make sure a fresh day I can find myself making mistakes here and there, all kinds of mistakes, whether it's dyslexia, swapping numbers back and forth. My brain is just a whole bunch of mess. I got too much information in there for it to stay in the proper order for whatever reason. I'm just built that way. And then market data indicators for gamma direction. So there's a case for gamma, the overall market. There's certain cases for what happens in a positive or negative gamma. This is very, very big to know whenever trading. You need to know the overall direction, the overall characteristics of a market, so you know how and what strategy you need to take in order to make sure whatever investments, whatever trading you do in that day, you know the overall condition of the gamma. goes into detail, and that's going to come out in the 22nd. Oh, otherwise, this was one of the big pieces that I wanted to go over. Just kind of inform everyone. Sorry, I haven't been live very often. The last 2 weeks, YouTube algorithms going wacko. I'm trying to create a comfortable environment for myself to juggle everything I do from teaching students to data analytics to programming, from mathematics to programming to data markets, statistical analysis. This is what I do on a daily, but I'm trying to like partition it because if I do everything in one day, it drives me crazy. Um, so I'm trying to kind of organize it. Maybe 1 week for streaming, 1 week for data analysis, writing articles, 1 week for mathematics. I'll go over some of my students' most um, or biggest issued subjects, those kind of things. Uh, yeah, that's it. That's it. I just wanted to drop in, let you guys know I'm good, chilling. I'm alive. I'm surviving like everyone else is nowadays. But I also have a lot of red flags, a lot of like gut feeling something is around the corner, and this is my analysis so far. So make sure if you want to keep up with trading, if you want to find me and have access directly to me, you can go into my Patreon, Super Scholar Chris MIA. Drop in. You can join for free. You don't have to buy anything, but I do have services as well. Whether it's teaching K-12 mathematics, going into statistic, calculus, whatever math you need. I've been teaching for over 15 years. Valencia, University of Central Florida. I've taught over 5,000 students, all kinds of subjects, and I do programming as well. So I can teach you programming, anything from Python, C++, JavaScript, Lua, AutoHot script for some of you that may or may know that little scripting language, Bash shell scripting, Linux-based systems. There's just so much to go. There's so many subjects. This is all in my brain. And yeah, you can follow me in my updates on my Patreon. You can support me just by joining for free. Keep updated with what's happening, especially if you're trading. And if you do need help or you have maybe a student in your life that you want to assist with their grades, I'll be happy to help. I currently work with Stigme Learning, and I have been getting a lot more students in the new year, a lot of math students, and helping them out. I do assist with dyslexia as well. ADHD is a give or take. I can be entertaining for ADHD, but sometimes you may need to have a person in instead of a remote educator, because I do all of my work remotely. Ah, but it's been crazy. It's been crazy. Other than this, I will be going forward with PHP. I will be basically uh, connecting the previous projects we have for the stream, the live stream, the JavaScript dashboard. We'll be attaching that to a PHP server and then seeing how that works. That's the next project on the math level. And sorry, on the programming level and on the math level. See, I'm already dyslexiaing the process there. On the math, that's the programming level. On the math level, I'm planning on going into factoring, um, onto sequences, algorithms, and basically a lot of tricky math subjects between like 11th, 12th grade. And of course, I think I'm doing some discrete mathematics for those logical weightlifting scenarios. So that's the plan for the next question mark time. Could be a month, it could be 2 months. Try not to rush myself too much. I haven't done too many videos, but I'm trying to maybe make a couple more videos as well versus just live streaming all the time. But I'm still learning my video editing process, schematic, and workflow. It's going to take some time for me to get used to the video editing. Um, Other than me programming everything you see here from this border, it's a little bit wanky. Programming my border, programming background to do animations. I like to program stuff and just let it run. That's it. But the editing part is going to be a bit on the next level for me, using DaVinci to basically do some editing. Need to learn a bit on that. So, given the time, I'll be back with more details on programming and mathematics. Look out for more videos in the future that I'll be putting together. And keep an eye out on the market. Don't hold cash. Not a good idea. Not financial advice, but I mean, just, look at it. Just look at it. Just look at it. Just look at it. I mean, look at two things, not just one. This is the SP 500 to gold anchor. Here's what the SP 500 to fiat looks like. It looks like it's going up. It looks like we're going to the moon and we're all making a ton of money, but this is the actual value. This is the fiat inflated value. That's the problem. And then I did also real estate. Home median prices to gold. Home median prices. The home median prices are very low, actually. It's super odd. But if you look at the regular fiat cash, inflated value, they're very high. People cannot afford homes. So what is the difference? Why is there a huge difference? Is because I'm using a gold or using the gold commodity as an anchor to bring down the reality of the actual value that's being basically obfuscated by inflation. And this is why I'm seeing something potentially of a hyperinflation cycle happening. We might not end up like Germany, but I think we can muster a Japan. I think we can maybe make a Japan. And if we make that Japan, well, what, 1,000 yen for bubblegum with a negative interest rate experiment again, trying to pay back debt. It's gonna be a little bit weird. It's gonna be a whole different economy if this comes out of control, and I think it will. So that's it. Thanks for watching. Thanks for joining. Oh man, I'm constantly looking at so much stuff. It's a headache. It's an absolute headache, especially with political events. When you see so many political events happening and the same narrative on every single channel possible, you start to think if there's so much political crap going on with this same thing over and over, what's not being put on news, right? What's not being put on the news cycle, or what's trying to be drowned by the news cycle? And after all these homicides and murders and all this chaos happening in the UK and Nepal going crazy, you're like, okay, but what is all this trying to drown? So I've been basically looking underneath the veil trying to figure out what exactly is happening. And then I found that um, the the Tricolor company that just went bankrupt, and that might cause a domino scale effect, like Archegos. So more details in the description. I'm about to edit it after I end this little stream, and you can take a look at more articles that I've written there, and you know, get some knowledge, man. We're going away from the hard work makes money situation. We're going into that grab the thing that loses the least amount of value sort of strategy for the next 10, 15 years. And it might actually be stocks because we do have, based on the gold anchor on the SP, we do have movement to go up and catch up back to where it was back in 2000. That's the scary part. We're kind of basing with gold. With regular fiat, it looks like we're at all times high, sell, 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 or buy to the moon, all this emotional stuff. But when you anchor that to gold, we have that ability to pop back up. So I'm personally not holding cash. Cash is probably the worst investment for the next 10, 15 years. Anyway, that's it. I'm going to stop babbling. Thanks for joining. I'll see you later. I'll be back in the future. Again, sorry for being absent. Going through a lot of cycles in my brain. Chilling cycle, friend cycle, work cycle, teaching cycle, programming cycle, statistical analysis cycle, a lot of stuff. I gotta balance my life a little bit, but I'll be back. Like and subscribe if you like this kind of content. Look up all the other videos I have. I do have a lot of learning material available right now on my YouTube, so check it out. A lot of anything from mathematics, SAT type problems, programming, JavaScript, Python, AI stuff, basically working with your own AI. If you look through the videos, you'll be able to essentially do these kind of concepts as well. I teach you to be self-sufficient.